First, I want to get into a little bit, just as a curiosity, because I was a little curious about how much Gerald Celente might have lost in MF Global, which I almost guarantee you he's getting that money back because he's screaming a lot, and it's a big embarrassment to people. So if he hasn't gotten it back or is on his way to getting it back, I'd be very surprised. But I had a feeling it was less than $500,000 and nowhere near $1,000,000, because when he's saying six figures, if it was up to $800,000, he would have been saying I lost nearly $1,000,000. And I think people should be able to read between the lines when people say stuff, because you could pick up on things. You know, choice of a couple words you'd have to figure was in a lower range. But, you know, he said he had almost enough for a contract. Well, a contract of gold, as you could see here, is 100 troy ounces, right? Delivered at exchange to licensed warehouses. So 100 troy ounces, I don't know, 1750, 175,000. I'd assume that's about what he lost. Just as a little tidbit, I know some other information. I don't know how much I want to present on here because it's public, and I'm going to really not say where it's from, or if this is kind of a plan or an estimate. It's in the Southwest in a desert, and it's not in California, but it's in America. To give you an idea of the type of minerals that could be in the ground that are tested, and these are things that aren't mined. They tested for, and they assumed 100 feet deep, you got 12,000 tons of material that you're going to be mining. And these were, you know, what it was. There's about a little over a half ounce of gold in a ton, almost an ounce of silver, platinum, palladium, rhodium, right? And recovery rates were generally about 95%. And the figures I saw on this were under $100 a ton to process. I think that was total, BS. But mining, when the prices are up, you get a hell of a lot of profit. Just like oil, you get a hell of a lot of profit. The big problem with these type of operations, you need so much damn equipment that you can't just start it up overnight. I mean, you need some major capital expenditures. I mean, it's, I don't know, $1 billion, not $1 million, like $1 billion for a real operation that's sizable. And it just doesn't, there's a million studies that have to be, not a million, but a lot of studies that have to come in ahead of time. But these numbers, I'm not going to say they're what they are, but they're not fiction. And this is in the United States. There is a lot of metals out there. There is a lot of metals in the ground, but as anything, price goes up when there's a bottleneck, and there is creating a bottleneck because the fear of what's happening in the currency markets and things. But these were the amounts that were available per acre, and you're talking when you get into a square mile. So you got 640 acres in a square mile. You're talking about 7 million ounces of silver, and you're talking values in the billions even after it's recovered. So you got $12 billion in a square mile. Now, this has nothing to do with these people, but I just want to kind of get a little basic. And I'm not a person into mining, but I know some about this stuff. And I work with a lot of different businesses. This is, like they'll have claims, and these people are out in California. This is a Santiago family, and these claims, they're very old claims. They're one of the largest gold mining claims in the whole United States. It's common knowledge. It's public information. I'm not giving any secrets out here. And those numbers I gave before have nothing to do with the Santiago family or the values of their stuff. But I don't know, maybe it's a rough approximately roughly what that is, because this is supposed to be one of the most valuable gold mine claims in a country. It's near China Lake in California, China Lake Naval Weapons Station, California. And you're talking about acreage claimed, 2,700, 1,700, 1,700, 1,700. So you got many thousands of acres claimed. So you got quite a few square miles. So when I was looking at this over here, you're talking per square mile, and you're talking, maybe 10 square miles. So maybe this is, I'm just not really correlating it with what they have, but maybe real roughly, it would be 120 billion of assets and metals down in the ground, and that's recoverable. And that is to 100 feet. You can go down another 100 feet. You might get less recoverable stuff. You might get less metals, but you're going to get pretty close to the same thing in a desert. You're approximately going to get not that much different. You can go down as far as your operation allows you to do, and it gets a lot more difficult, obviously, the further down you go. But did find this interesting, and I just wanted to bring it out because some people are probably wondering about a silver shortage per se on the earth. There's not a silver shortage on the earth, there's a silver shortage in coins. That's a big difference, because you just can't snap your fingers and start up a mine. There's a hell of a lot that goes into it. And with dry prices, and looking at this real rough oil chart, and I wish I knew how you can overlay silver on over the oil price on this net Danny. It'd be nice to know, but I don't think it does it. But when oil was knocked down, and same thing like with silver or gold, if price is knocked down, what happens is all the oil wells, all the gold mines, they stop. They basically say to hell with it. They're not making money. Forget about it. I mean, I showed that stock yesterday. I think it was Endeavor. In 2008, they were losing money. If the price of silver was suppressed for a couple more years, that place would have been done with. But they're doing very good now. Price of silver is up. Price of oil goes up. You get more oil well drillers. But they work on if you're going to start a new operation up, what's going to happen is you got to make a plan that's going to be out for 4 or 5 years. Like that one I had on a pro forma, that was for 7 years. So you have to have the expectation that the price of the metals or whatever the commodity is for like big operations like gold mines, silver mines, oil drilling, you have to have enough of an economic forecast and strong enough information to support what you're going to do for the next 7 years, or else nobody's going to lend that kind of money. It's a very, it's a risky operation. So, I mean, we probably have a lot of metals in the ground, even in the United States, and, that's pretty much been, in my opinion, impression from what I saw. But as far as, end product coins and end product that the investor can just get his hands on, it's not going to happen. It's not going to happen. So I know a lot of people are probably wondering about what the hell is going to happen in these markets, and I am too. I don't think I think December might actually present a surprise. You might see a lot more buying, because I know they talk about the price suppression. I know there's a price suppression. I believe that, but I don't even know how much they can really suppress the price even in the short term. I know these gold miners are making money. The silver miners are making money. The oil companies are making money. So the price isn't really like super low, It's just that the problem is what's going to really knock these prices up a lot is the debt crisis. You don't want to be holding fiat dollars if, the whole government goes down and there's debt default. But I don't think that's going to happen right away. My personal plan is, I got stocks and ETFs too because I don't have any debt. I got, you know, I mean, I'm kind of set in other ways. I pay attention to the food and all that kind of stuff, the energy. I have all that stuff. I'm not stupid. I put the most essential things first. But I also realize that, we don't actually make payments to things in silver and gold yet, and the values are still far too depressed. It's kind of a long-term play. And actually, a lot of things I did in these markets, most of the time they come out pretty good, actually, to tell you the truth. So I expect the oil probably to go up before the silver to go up. If they go up together, a lot of times they move together. If they go down together, whatever, doesn't mean nothing to me because, that's just the way it goes. So, but, that's something. I also think some of the ETFs aren't so super unsafe as some people say. Because if the metal's in the ETF and your broker goes down or some crap like that, well, you're not going to really lose out. As long as you have some kind of paper to back up your claim and stuff. I don't think everything's going to go down. Now, where everything can go down seriously if we had like an EMP attack or something like that. But I mean, if we had an EMP attack, I think there'd be a lot of other stuff going on besides even that. I mean, that's really getting out there. But as far as a debt crisis just shutting everything down, I don't buy into that. I don't. But do buy the physical metals first before you go messing with any stocks. I made that little recommendation before, but I think you should only do that with a small portion of money, and that's only if you see a hard pullback. It's primarily stick with the physical, especially go with the food first. The food is more important than the metals.